A series of proposed business tax cuts designed to help improve New Jersey's economy drew criticism today. A report says lawmakers are moving too quickly on the legislation in the face of projected budget deficits. But business groups say the moves are long overdue. State House correspondent Jim Hooker reports.
The global and U.S. economic meltdown is leaving a trail of joblessness and homelessness in its wake. In response, a bipartisan coalition of lawmakers and the governor say they're positioning New Jersey's economy to come out stronger on the other end of that meltdown by moving quickly on a series of business incentive measures, including tax cuts. But a Trenton-based liberal think tank says lawmakers who've put the legislation on the State House fast track aren't exercising the caution they should because there have been no comprehensive studies to show the tax reductions would result in job creation.
And there's no question New Jersey's economy is hurting, but the report that we're releasing today says don't make judgment a casualty of this crisis.
Schur accused the business community and its allies of using the poor economy to seize momentum for bills they've wanted passed for years.
And now, under the cover of a difficult economy, they're hoping they can get it done.
And with state sales and income tax revenues projected down by at least $400 million headed into next year, Schur, whose group estimates the business tax cuts would cost about the same amount, says this is no time to offer tax breaks.
When you're at the bottom of a deep hole, the last thing you need is a shovel.
We need to take that shovel and take that pile of dirt and refill the hole so when the national recession eases or it's over, we're at a level playing field with our competitors.
One state business leader says it's difficult to pin down the number of jobs that would be created through the cuts, but adds New Jersey's anemic job growth compared with its neighbors of earlier this decade shows what hasn't worked.
Forecasting, especially in an economy like this, is very difficult. Looking backwards is 2020. It's hindsight. When the rest of the region was growing, we weren't because of our tax policies.
The Assembly Budget Committee chairman, meanwhile, says he doesn't need studies to tell him the tax cuts would help the state's business community grow jobs.
If you look throughout history, economic crises come and they pass. These clouds will part. The position that New Jersey takes on where we stand when the clouds part will make us competitive with our neighbors.
And Greenwald says the state treasury can afford the reductions.
The decisions to cut government spending, to reduce the workforce, to scale back programs, to help stimulate our economy, put us in a position that was different than our neighbors like New York, Pennsylvania, California, and other states. They're really going through horrific crisis, opening their budgets. We don't need to do that because of the conservative approach we took.
New Jersey Policy Perspective took issue with 3 of a number of the business-friendly bills now moving through the legislature. Under one bill called Single Sales, companies would be taxed on a single sales formula rather than on a combination of property, payroll, and sales taxes now in use here. Another, called a throwout rule, would repeal a rule that requires a New Jersey company to include in its tax payments income earned in another state if that state doesn't tax it for whatever reason. And last, a bill now on the governor's desk would allow businesses to write off losses over a 20-year period, as is enjoyed by companies in New York and Pennsylvania, rather than the 7 now in place. By the admission of most, it is arcane tax law that would be affected, with potentially hundreds of millions of real tax dollars at stake. Jim Hooker, NJN News.